The precious metals world just witnessed something absolutely extraordinary. Silver reached an all-time high of over $80 per ounce this week, and Wall Street is scrambling to understand what just happened. This isn't just another commodity rally. This is a historic market transformation that's catching everyone by surprise. Right now, as I'm speaking to you on December 28th, 2025, silver is trading around $80 per ounce. Let me put that into perspective. At the start of this year, silver was hovering around $29. That means silver has surged more than 170% in just 12 months. To give you context, that's a bigger percentage gain than most cryptocurrencies, tech stocks, or any traditional asset you can think of. But here's what makes this truly mind-blowing. Almost nobody saw this coming. And while everyone was focused on gold, Bitcoin, and stock markets, silver quietly built up pressure like a coiled spring. And when it finally released, the explosion was spectacular. Major investment banks, commodity traders, and even seasoned precious metals experts were caught completely off guard by the magnitude of this move. So what's really driving this insane rally? Why is silver making this unprecedented surge? And most importantly, what happens next? By the end of this video, you'll understand the critical factors behind this rally, the shocking developments that accelerated it, and where leading analysts believe silver is heading in 2026. Let's dive in. The foundation of this rally isn't built on speculation or hype. It's built on something much more fundamental, something that's been developing for years. We're witnessing a genuine supply crisis, and it's getting worse by the day. According to industry data, the global silver market is now in its 5th consecutive year of supply deficit. Think about what that means. 5 straight years where global demand has exceeded supply, and the numbers are staggering. In 2025 alone, global silver demand reached approximately 1.24 billion ounces, while supply only hit about 1.01 billion ounces. That's a deficit of roughly 230 million ounces in a single year. But here's where it gets interesting. This isn't a temporary imbalance. The deficit has been growing year after year, and the gap keeps widening. Why? Because silver demand is exploding from multiple directions simultaneously, while supply remains constrained. Let's talk about the demand side first, because this is where the real story unfolds. Silver isn't just a precious metal anymore, it's become absolutely critical to modern technology and the green energy transition. Solar panels require silver. Every single photovoltaic cell uses silver paste for electrical conductivity. And guess what? Solar energy is booming worldwide. In 2024, demand for silver from solar panel manufacturing grew by an incredible 64%. That's right, 64% in just 1 year. Solar manufacturing has now surpassed jewelry to become the single largest source of silver demand globally. And solar energy still only accounts for about 9% of global electricity production. Imagine what happens when that percentage doubles or triples over the next decade. But solar is just the beginning. Electric vehicles need silver, battery systems, charging infrastructure, electrical contacts. All of these components require silver because of its superior conductivity. The average electric vehicle uses between 25 to 50 grams of silver, and EV production is accelerating globally. Then there's the semiconductor industry. Advanced electronics, smartphones, computers, servers, all depend on silver. The artificial intelligence boom is driving massive demand for semiconductors, which means more demand for silver. Data centers powering AI models need millions of advanced chips, and each one contains silver. Add to that traditional industrial applications, medical devices, water purification systems, and you start to see why demand is so robust. This isn't speculative demand. This is structural industrial demand that doesn't disappear when prices rise. Now let's look at the supply side, and this is where things get really concerning. Silver production hasn't kept pace with demand growth. Most silver isn't even mined directly. About 70% of silver comes as a byproduct of mining other metals like copper, zinc, and lead. This means silver production is tied to the economics of those other metals, not silver itself. When copper prices are low, copper mines reduce production or close, which means less silver as a byproduct. Mining companies can't just increase silver output on demand because they're not primarily silver miners. This creates a structural supply constraint that's very difficult to overcome quickly. Global mining output has essentially plateaued over the past several years. New silver mines take years to develop and billions in investment. Environmental regulations, permitting processes, and geological challenges mean we can't simply turn on a tap and get more silver flowing. Above-ground stockpiles have been declining steadily as industrial users draw down inventories. Major silver exchange-traded funds have seen significant outflows of physical metal. The physical silver available for immediate delivery has shrunk dramatically, creating what traders call backwardation in futures markets, where near-term prices exceed future delivery prices. This is a classic sign of severe physical shortage. So we have surging demand from multiple unstoppable trends: solar energy, electric vehicles, semiconductors, AI infrastructure, meeting constrained supply from a production structure that can't respond quickly. This fundamental imbalance has been building for 5 years. That's the foundation. But foundations alone don't create the kind of explosive rally we've witnessed. Something had to act as a catalyst, a trigger that accelerated everything. And that catalyst arrived in the form of a major geopolitical development that shocked global markets. China, which controls approximately 60 to 70% of global silver supply through its massive refining infrastructure, announced new export restrictions, effective January 1st, 2026. That's just 4 days from now as I record this. These aren't minor adjustments. China is implementing a strict licensing framework that fundamentally reshapes global silver flows. Under the new rules, only large, state-approved companies that produce at least 80 tons of silver annually will be eligible for export licenses. Smaller and mid-sized exporters are effectively shut out of the market. China is essentially creating an export cartel for silver, similar to what they did years ago with rare earth elements. Why is China doing this? Several strategic reasons. First, China needs silver for its own massive industrial base. China is the world's largest manufacturer of solar panels, a huge producer of electronics, and is rapidly expanding its electric vehicle industry. They need every ounce of silver they can get for domestic use. Second, this gives China enormous geopolitical leverage. By controlling silver exports, China can influence global supply chains, impact Western industrial production, and use silver as a strategic tool in international negotiations. It's resource nationalism as a form of economic statecraft. Third, by restricting exports, China creates scarcity in global markets, which drives prices higher. Higher silver prices benefit Chinese producers and increase the value of China's strategic reserves. The announcement sent shockwaves through global markets. Western manufacturers, already struggling with tight supplies, suddenly faced the prospect of even more severe shortages. Industries dependent on Chinese silver scramble to secure alternative sources and build inventory before the restrictions take effect. Market participants who had been shorting silver, betting on price declines, found themselves trapped. Major trading firms reportedly held significant short positions, expecting silver to weaken. Instead, prices exploded upward. This created a short squeeze dynamic where traders had to buy silver at rising prices to cover their positions, which pushed prices even higher. It became a self-reinforcing cycle. Physical silver premiums, the amount buyers pay above the spot price for immediate delivery, skyrocketed. In some markets, premiums exceeded standard pricing by double-digit percentages. Major mints in Canada and the United States reportedly ran out of silver coins and bars. Bullion dealers faced unprecedented demand and couldn't source enough physical metal to meet orders. Chinese domestic silver markets showed even more dramatic moves. Local prices in China reached record levels on Christmas Day, December 25th, with futures markets moving into backwardation. This indicated acute physical shortage within China itself, even before export restrictions formally begin. India, another major silver consumer, responded by aggressively importing silver. In October alone, India imported over 1,700 tons of silver, trying to build stockpiles ahead of the Chinese restrictions. This additional demand further strained global supplies. The combination of fundamental supply-demand imbalance, plus the China export restriction announcement, plus short covering, plus panic buying by industrial users, created a perfect storm that sent silver prices parabolic. But let's talk about what happened in the broader market context, because silver didn't surge in isolation. Gold also hit all-time highs, reaching above $4,500 per ounce. The entire precious metals complex rallied together, driven by multiple supporting factors. Interest rates played a crucial role. The U.S. Federal Reserve cut interest rates multiple times through 2025. Lower interest rates reduce the opportunity cost of holding non-yielding assets like precious metals. When bonds pay less interest, gold and silver become more attractive as stores of value. Currency concerns added fuel to the fire. As central banks worldwide continued expansive monetary policies, concerns about currency debasement increased. Precious metals serve as hedges against monetary inflation and loss of purchasing power. Geopolitical tensions provided additional support. Ongoing conflicts, trade disputes, and international instability drove safe haven demand. When uncertainty rises, investors historically move toward hard assets. But here's what's fascinating. Silver outperformed gold significantly. The gold-to-silver ratio, which measures how many ounces of silver equal 1 ounce of gold, compressed dramatically. At the beginning of 2025, the ratio was around 90, meaning 90 ounces of silver equaled 1 ounce of gold. By late December, the ratio dropped to around 65. Why did silver outperform? Because silver has both monetary properties like gold and industrial demand that gold lacks. Silver benefits from safe haven flows plus structural industrial consumption. It's the hybrid nature of silver that makes it unique among precious metals. Some analysts argue silver was significantly undervalued relative to gold for years. The rally represents a catch-up move as markets repriced silver based on its fundamental supply-demand dynamics and industrial importance. Now, let's address the elephant in the room. What happens next? Where does silver go from here? This is obviously the question everyone wants answered, and I need to be clear that nobody has a crystal ball. Markets are unpredictable. But we can look at what leading analysts and experts are saying. Many analysts believe silver has further upside potential based on fundamentals. The supply deficit isn't going away. China's export restrictions haven't even taken full effect yet. Industrial demand continues growing. These factors suggest continued price support. Some technical analysts point to historical silver rallies. In 1979 to 80, silver went from around $9 to over $50 in a matter of months during a previous supply squeeze. In 2011, silver briefly touched $48 during another rally. And while past performance doesn't guarantee future results, it shows silver can make explosive moves. Bullish analysts suggest silver could potentially reach $100 or higher if current dynamics persist. They cite the extreme supply deficit, the structural nature of industrial demand, and potential for increased investment demand as silver attracts more attention. However, we must also consider bearish scenarios and risks. If there's a global economic recession, industrial demand could weaken significantly. And while precious metals often hold value during recessions, silver's industrial component makes it more vulnerable than gold. Price volatility is almost certain. Silver is known for dramatic swings. The current rally could see sharp corrections before potentially moving higher. Anyone considering silver should expect turbulence. Alternative supply sources could develop. While it takes time, high prices incentivize new mining projects and increased recycling. Eventually, supply could respond to these price signals. Substitution is possible in some applications. If silver becomes too expensive, manufacturers might develop alternative materials for certain uses, potentially reducing demand. Policy changes could impact markets. China could reverse export restrictions as part of diplomatic negotiations. Central banks could shift monetary policies in ways that affect precious metals. For anyone watching this video considering silver, whether as an investment or just following the market, several key points to remember. First, do your own research. Don't make financial decisions based solely on YouTube videos, including this one. Understand the risks in your own financial situation. Second, if you're interested in physical silver, recognize that premiums above spot price can be substantial. The price you see quoted might differ significantly from what you actually pay for coins or bars. Factor that into your calculations. Third, there are different ways to gain exposure to silver. Physical bullion, exchange-traded funds, mining stocks, futures contracts, each has different characteristics, costs, and risks. Understand what you're buying. Fourth, silver is volatile. Price swings can be dramatic in both directions. Never invest more than you can afford to lose in any commodity or speculative asset. Fifth, be aware of scams. When asset prices surge, fraudulent schemes multiply. Be extremely cautious about unsolicited investment offers, high-pressure sales tactics, or promises of guaranteed returns. Looking at the bigger picture, this silver rally tells us something important about the global economy. We're in the midst of a massive energy transition. Solar power, electric vehicles, advanced electronics, these aren't fads. They're fundamental shifts in how human civilization operates. Silver sits at the intersection of this transition. It's the metal that makes solar panels work efficiently. It conducts electricity better than any other element. It's essential to the technology that's supposed to decarbonize our economy. The supply-demand imbalance for silver reflects a broader challenge. The green energy transition requires enormous quantities of critical materials. Silver, lithium, cobalt, rare earths, copper, the list goes on. Are we prepared to source these materials sustainably? Can supply chains adapt quickly enough? China's export restrictions highlight resource nationalism and economic competition between major powers. Critical materials are becoming tools of geopolitical strategy. This trend extends beyond silver to many other commodities. The rally also raises questions about inflation and monetary policy. When a basic industrial commodity more than doubles in price within a year, that has ripple effects. Manufacturing costs increase. Product prices may rise. Central banks must balance economic growth against inflation concerns. For the broader precious metals market, silver's outperformance has captured attention. Investment flows into silver ETFs and mining stocks have accelerated. Retail investors who missed earlier phases of the precious metals bull market are now looking at silver as potentially offering more upside than gold. Mining companies focused on silver are benefiting tremendously. Higher prices mean improved profit margins, ability to develop new projects, and increased valuations. However, as mentioned earlier, most silver comes as a byproduct, so pure silver mining stocks are relatively limited. The silver market has historically been relatively small compared to gold or major commodities like oil and copper. This smaller market size means that large capital flows can move prices dramatically. If significant institutional or sovereign wealth fund money moves into silver, the impact could be substantial. So where does this leave us? We're witnessing a genuine supply crisis in a critical industrial metal. We're seeing geopolitical competition over strategic resources. We're experiencing the early stages of a multi-decade energy transition that requires vast quantities of specific materials. Silver has captured the spotlight because it embodies all these themes simultaneously. It's monetary metal and industrial commodity, its ancient store of value and modern technological necessity, its traded metal and geopolitical tool. The rally that shocked Wall Street reflects fundamental realities that have been building for years. Whether prices continue higher, consolidate, or correct, the underlying dynamics haven't changed. The world needs more silver than it can currently supply. That's the simple truth driving this complex market. As we head into 2026, all eyes will be on how China's export restrictions actually play out. Will they be strictly enforced? Will diplomatic negotiations create exceptions? How will global supply chains adapt? These questions will likely drive silver prices in the coming months. Industrial users are watching closely, concerned about costs and supply security. Investors are weighing opportunities against risks. Governments are reassessing strategic mineral policies. The silver market has gone from obscure corner of the commodity world to front-page news. This has been a deep dive into silver's extraordinary rally, the fundamentals behind it, the catalysts that accelerated it, and the potential implications going forward. Whether you're an investor, industry professional, or simply someone interested in global markets and economics, silver's story in 2025 is one you'll remember. The precious metals world is rarely boring, but what we've witnessed this year is exceptional even by historical standards. Silver has delivered returns that would make most asset classes jealous. The question now is whether this is just the beginning of a much larger move or a peak that will be followed by correction and consolidation. Time will tell, but one thing is certain. Silver has proven it can still shock the market when conditions align. Thank you for watching this analysis of silver's historic rally. If you found this information valuable, consider subscribing for more in-depth market analysis and economic insights. The world of commodities, currencies, and markets is constantly evolving, and understanding these moves can provide valuable perspective on the global economy. Stay informed, stay curious, and always do your own research before making any financial decisions. Until next time.